The National Bureau of Statistics (NBS) says the headline inflation slowed by 0.5 percentage points to 22.22% in June from 22.79% in May 2025. This represents the third consecutive month decline since April 2025, when it slowed to 23.71%. The Bureau disclosed this in its Consumer Price Index report for June 2025. Welcome to Business Point, where we x-ray the Nigerian economy and the government policies. I am Kike Lomo Okeri. The food inflation saw a 0.83 percentage point increase to 21.97% in June from 21.14% in May. Increase was also recorded in month-on-month food inflation. This is according to NBS. It was driven by increase in the average price of dried green pea, fresh pepper, white dried shrimps, crayfish, fresh meat, fresh tomatoes, plantain flour, granules, ground pepper, among others. On food inflation rate, NBS says the food inflation rate in June 2025 was 21.97% on a year-on-year basis. This was 18.93 percentage points lower compared to the rate recorded in June 2024, which is 40.87%. On a month-on-month basis, however, June 2025 food inflation was highest in Enugu with 11.90%, in Kwara 9.97%, and in Rivers State 9.88%, while Borno -7.63%, Sokoto -6.43%, and Bayelsa -6.34% recorded decline in food inflation on month-on-month basis. Global palm oil price have been projected to hit a 1,200 per metric ton in 2025 from $900, according to a new report by Afrinvest West Africa. This 33% surge is driven by surging crude palm oil price in Indonesia, Malaysia, the two largest global palm oil producers, and strong operational fundamental. The report attributes this to several factors, including expectation of firmer crude oil price, which boosts biofuel appeal, optimism over softening US-China trade tensions, which may support edible oil demand, and reduce supply to the biofuel mandate program implemented by Indonesia and Malaysia. Despite the 16.3% decline to $900.0 per metric ton in the first 5 months of 2025, the crude palm oil price grew, hovering around $1,200 per metric ton by year end. Afrinvest noted that the global crude palm oil price surged 36.2% year-on-year to $1,086 per metric ton in 2024, the highest level since July 2022, due to Indonesia B35 mandate, Nilo-driven supply disruption, and heightened demand as buyers switch from sunflower oil amid geopolitical tension. Unrest in Russia and Ukraine further disrupt over 70% of global sunflower oil exports last year, prompting consumers to shift demand towards crude palm oil and creating additional price pressure across the edible market. However, the price rally project by Afrinvest creates an opportunity gap for Nigeria. President of the National Palm Oil Producers Association of Nigeria, Alphonsus Nyang, warns that Africa's most populous nations' reliance on Malaysia and Indonesia for its palm oil needs will be risky in the long term. This is an opportunity for Nigeria to increase its local production. Otherwise, what is happening in the cocoa value chain will soon happen to palm oil value chain. Stakeholders value chain believes Nigeria can leverage its position as the fifth largest producer of palm oil to tap into the current price rally if new palm trees are planted and better policies are made to guide the sector from illegal imports. With an annual average palm oil production of 1.5 metric ton and a growing demand by both industries and consumers, Nigeria has a supply gap of about 450,000 metric ton, which it filled through imports in 2024. Crude oil palm oil exports grew by 1.7% to 44.2 million metric ton, led by Indonesia, which contributed 51.1%, while Malaysia contributed 34.9%. The report reveals that export growth was supported by firm global demand, although logistic bottleneck, shipping delays, and restrictive trade policies from top exporters like Indonesia exposed down risk to global trade volume. This growth marked a recovery from previous years of climate-related disruption and reflected increased investment in plantation productivity, including improved seed varieties, better fertilization practice, and wider adoption of mechanism harvesting techniques in key producing regions. Affiliates noted that this shift presents a strategic opportunity for Nigeria to revive the red gold by transforming its underperforming oil palm sector into regional hub and closing a 450,000 metric ton annual supply gap. The federal government has pledged to end Nigerian long-standing dependence on fish importation by significantly scaling up domestic fish production in a renewed push to strengthen food security, create jobs, and boost non-oil exports. The Minister of Marine and Blue Economy, Adegboyega Oyetola, made this known on a consultative meeting with leaders of Fishery Cooperative Group in Abuja. The meeting convened by the Ministry of Marine and Blue Economy is part of the ongoing effort to reposition the Nigerian aquaculture and fishery subsector, as well as chart a new course towards self-sufficiency in fish production. It says the federal government is fully committed to supporting the sector through policy innovation, technical support, and financial inclusion. It emphasized that the federal government will aggressively scale up local fish production, reduce import dependency, and transform the sector into a key driver of sustainable economic growth. The session brought together major stakeholders including the Fishery Cooperative Federation of Nigeria, Tilapia Aquaculture Developer Association of Nigeria, Catfish Farmers of Nigeria, Women in Fish Farming and Aquaculture, and the Practicing Farmers Association of Nigeria. In a statement signed by the Special Advisor on Media and Communication to the Minister, Bolaji Akinola, Oyetola noted that the ministry is intensifying efforts to support youth and women in aquaculture. He stated that empowerment initiatives, including startup grants, were being developed to boost participation and productivity in line with the President Bola Tinubu's renewed hope agenda. By increasing youth participation in aquaculture is not only vital for food production but also a strategic solution to reducing unemployment. Stakeholders at the meeting also raised a wide range of challenges plaguing the sector, including overfishing, poor access to finance, inadequate cold storage, high cost of imported fish feed, weak transportation network, multiple taxation, and low youth involvement. In response, Oyetola assured participants that the ministry is actively engaging both local and international partners to address this issue. He says these discussions are ongoing with the World Bank to secure funding support for fish farmers and the Nigerian Agricultural Insurance Corporation to ensure accessibility and affordable insurance coverage. The minister also noted that plans to replicate the successful aquaculture model at the Oye Dam across the other region in partnership with the Federal Ministry of Water Resources, stressing the importance of interministerial collaboration. Alright, let's take a short break now. We'll be right back. Don't go away, stay with us. Welcome back. If you're just joining us, this is Business Point on Global Television. It's a program that extracts the Nigerian economy and the government policies. The Nigerian currency maintained its bullish moment in Nigeria. Let's take a quick short break. We'll be right back. Don't go away. Stay with us. Welcome back. We sincerely apologize for the break in transmission. It was due to technical issue. Alright, moving on. The Nigerian currency maintained its bullish momentum, reaching a 4-month high against the US dollars and closing at 1,518 naira to a dollar on Nigerian foreign exchange market. The country's official exchange market CBN data shows that Nigerian naira settled at 1,518 naira to a dollar on Monday. This is the This is the Naira's strongest level against the greenback since March, and the first time it has fallen below 1,520 Naira since then, indicating that the country's currency is within range to break the psychological 1,005 Naira to a dollar level. Nigeria's Apex Bank direct involvement, which include a $50 million sales last week and a successful OMO auction, drew interest from international investors. Current fundamentals shows robust foreign portfolio inflow and ongoing dollar liquidity from CBN intervention, suggesting that exchange rate pressure are likely to stay contained over the long term. Furthermore, the gradual resumption of international transaction on Naira debit card, as announced by some banks, improved the perception of Nigerian foreign exchange market, especially considering the ongoing debt and participation in the official FX window. The outlook for the Naira also improved as Nigerian average daily production of crude oil increased to 1,547 million barrels per day in June, the highest level since January. Nigeria's most recent oil production figures released by the Organization of Petroleum Exporting Countries shows June output is the highest since January, with a 3.58% increase over May production of 1.453 million barrels per day. Access Holding PLC, the parent company of Access Bank, has reaffirmed its long-term strategic blueprint anchored on deliberate and structured progression, scale optimism and sustain. This roadmap, which has driven the group aggressive expansion across Africa and into key global markets, is now entering a crucial optimization phase expected to unlock significant value for stakeholders as the organization heads towards 2027. Speaking on the strategy, Bolaji Agbede, acting Group Chief Executive Officer, noted that the approach has always been a scale first through strategy expansion, then optimized through consolidation, synergy realization and operational efficiency. During the scale-up phase, a considerable amount of funding is required to drive investment in people, system, infrastructure and acquisition. The Access Holdings 5-year strategy plan, which runs through to 2027, also places financial inclusion and impact at the core of its growth agenda. By expanding digital access and scaling low-cost delivery platform, the group aims to onboard millions of previous unbanked and undeserved individuals and MSMEs across Africa into formal financial system. This is part of the broader strategy to enhance intra-Africa trade and empower smaller, older businesses and strengthen the value chain across key sectors, including agriculture, commerce and manufacturing. The full year 2024 financial result demonstrates that the group invests are already yielding meaningful outcome. Gross earnings rose to 4.878 trillion naira from 2.594 trillion naira in 2023, while profits before tax increased by 19% to 867.0 billion naira. Total assets surged by 55.5% to 41.498 trillion naira, reinforcing Access Holding position as one of the Africa's most formidable financial service institutions. Access Holding has continued to deepen its footprint across more than 20 markets, including key subsidiaries in UK, France, South Africa, and major trade corridor in Asia and Middle East. These strategic investments, although capital intensive, are already contributing to more diverse earning and base and positioning the group as a global player from Africa. FBN Holding, the parent company of First Bank, witnessed a massive off-market transaction on July 16, 2025, involving 10.43 billion units of its shares valued at 323.4 billion naira. The negotiated trade executed at 31.00 naira per share across 17 deals have triggered fresh speculations over possible realignment in the ownership structure of the financial holding company. The First Holdco share price closed at 32.2 naira per share, according to details on the Nigerian exchange. The bulk purchase was brokered by First Security Limited, a firm with the First Holdco group, suggesting that the deal may be related to an internal restructuring or insider-led consolidation. On the sales side were multiple high-profile brokers, including Cardinal Stone Security, Maritime Stock Brokers, Renaissance Capital, Regents Asset Management, United Capital Security, Stanbic IBT's stockbrokers, and even the First Security Limited itself. Alright, this is where we'll call it a wrap on Business Point today. Join me again tomorrow on Global Television, channel 365 on DSTV and 276 on Star Time. To stay connected, kindly follow us on all our social media platforms at Global TV NG. Till I come your way again, I am Kike Lomo Okeri. I celebrate you all.